Good evening, everybody. I am seemingly back from a little bit of a sabbatical. Not going to go into the boring details, but a couple life changes, one which included a move to the other side of the world, and I am officially, I guess what you could call it, settled by now. So I'm going to get right into this because this is a video among a couple others that I had planned kind of the skeletal outline for in writing before I could set my equipment back up and get started again. So my apologies for the time off. However, seems like things have been exciting for the past month, so I'm going to continue with my themes of getting you set up with plans. And the big one is differences between a market order versus a limit order. This may be rudimentary to some of you. This may be brand new. So just take it with my usual path that I go on, and I'll start with the outline, which is what is a market order versus what is a limit order, and also how to set up a limit order on Uphold. I'm going to use Uphold as an example for those who do use it. It is probably about 90% clear, at least on the customer service end, compared to some of the big boys like Schwab or Fidelity or TD Ameritrade. It seems like your traditional TradFi brokers, they have a very solid customer experience when you're doing trading. The crypto market just hasn't caught up to it yet. Fine, no big deal, but I think Uphold's about 90% there. However, doing market orders on Uphold is pretty easy. Limit orders can be kind of tricky depending on if you're using your desktop or if you're using your phone. So let's get started into it. And for those who have used market orders before, this is pretty much probably how you started trading. It's acting in real time to sell or buy an asset. You literally have a buy button or a sell button on your online brokerage account, again, on your phone or on your desktop. And the broker will accept or confirm that market order depending on their own inventory that they have. This is good for non-volatile investments and trades, particularly if you're just starting out. Google Nissan stock and see if that looks like a non-volatile investment for the past couple of years. This isn't an endorsement of Nissan stock, just to kind of look at it and see if you can agree. It is probably the opposite of volatility when you get down to it. So market orders are good for those who have just started into the trading world because you control everything that you're going to do from soup to nuts, beginning to end. Now, an Uphold example of this, they have buy and sell buttons when you're looking at assets, but when you're ready to actually execute a trade, maybe from a bank account, there's two little buttons. One's called a source, one's called a destination. Both of them you have to fill in. The source is always where the money is coming from. Could be a debit card, could be a bank account that you have linked. Could be another asset from your portfolio, which I'm going to get into at the end of this video. And the destination is always where the money is going to. So as an example, your source, if you're going to buy and you're in a buying mood, your source may be from a debit card and your destination may be XRP. But if you're in selling mode, your source may be from XRP in your portfolio and the destination may be a checking account. Just as a simple example, nothing new or earth-shattering. If you've used Uphold before, feeling I get is mostly you have used market orders when you were either in the mood to buy or have the money to buy accordingly. Now, limit orders are a little bit different, but they accomplish a same goal, which is either building your portfolio or cashing out when it gets to a certain price that you agree to. So this kind of fits into the set it and forget it mode. So the big thing to understand about limit orders is you are setting the sell price as the lowest price you are willing to liquidate at. Whereas if you are in buy mode, you're setting the buy price as the highest you are willing to purchase. I'm going to give examples of these just so you see this. Let's use XRP as example, trading at 189 as I was typing this up and doing this video. So if you're in the mood to sell your XRP, you're going to set a limit order on Uphold as the lowest price you're willing to liquidate. And you see 189, you may have a higher price than 189. So you can set a limit order for XRP at, let's just say, $3.78, and you refuse to sell it at any price lower than that. So if XRP hits 377 and then drops 20%, that limit order does not get executed because it did not hit the price that you signified was your lowest selling point. Look at this, soak it in, because I'm going to do an example on the buy side. And if you're ready to buy XRP, you set the buy price as the highest price you are willing to purchase that asset. Now, we see 189 today. Some of us got in at 30 cents. Some of us got in lower. Some of us have got in 50, the 40, 50, 60 cents range where it looked like it was hovering for at least a good year and a half. Some of us bought in at the $80, $90 range recently. So maybe 189 is too high for you, but maybe 90 cents you might think is a good price, or maybe something lower. So you can set a limit order when you're ready to buy. In this case, in this example, I used $1.47. You refuse to buy it at any price higher than that. You are setting the price of the limit order. So if XRP crashes down to 148 and then jumps back up to 189 to $2, and you set the limit order for 147, you refuse to buy it at anything above that, so 148 is too high for you, that limit order does not get executed. Simple enough. Now, looking at limit orders from the trad finance world, TradFi, which is where I come from, versus crypto, I'm going to focus on sell orders because we're in a bull market. I don't make financial advice on these channels, as you know, but if you're chasing green candles, you're going to go broke, just to let you know. TradFi settled cash when you're ready to sell something on a limit order. It goes into something called a core or a money market fund, and it usually takes 1 to 3 days to settle. It's called the T3 rule. I've seen it also go into annuities as well from some 403B plans. But basically what a core money market or annuity is, it's going to be the equivalent of cash. It's going to be something that isn't going to fluctuate. You're going to capture your earnings in it when you're ready to sell, and this is where it would go. In crypto, a little bit different. You can put in a couple different areas because there is instantaneous settlement on this. And it could be a stable coin. US digital coin is one. RLUSD. Just read an article that's going to be launched probably on the 4th of December. Good news for XRP holders. Stable coins are kind of the crypto version of a money market fund and a core fund that you'd normally see in a TradFi world, where it could be a debit card linked to your account. And the beauty of Uphold that I've seen the infrastructure be built in real time on this, is that when you liquidate your crypto to a debit card, it's instantaneous, meaning you can press the button to sell, open up your banking app, and you can see the money in there, validated, settled, liquid for you to use literally 1 second after that trade goes through. So there is something that has gone on, because it never used to be like this with Uphold. There is something that has gone on the back end on these rails that they're automatically going into this world of instantaneous settlement. You've seen it brokerage account to ledger or cold wallet, vice versa, peer-to-peer, wallet-to-wallet. Now you're starting to see it with the traditional finance institutions like banks. And I use a credit union. I don't use one of these major banks. So whatever they have tapped into, it sounds like they're almost there, because if you do the same thing with a routing account for checking or a savings, when you liquidate some crypto from Uphold, it takes the traditional 1 to 3 days to settle. So we've got what we're witnessing in our own lives that we've been hammering on this for a couple of years. What is the goal purpose of some of these financial coins that are going to change the way we actually do transactions and settlements? We're seeing it right here. We're at least at the halfway point, because they've already done it with debit cards, and they're I'm sure planning to do it with routing and account numbers for banks for checking and savings. And on Uphold, you can also do crypto asset to crypto asset, otherwise known as exchange. If you want to build some of your growth from XRP into an XLM portfolio, you can set source and destination as source is XRP at a certain price, XLM, and that's where it's going to go. And then once it hits that price, it does all the math and the administrative work for you on the back end. You don't have to actually do that. Now, I'm going to show you kind of an example of how to do this. This could be on your phone. It could be on your desktop or laptop account with Uphold. Here's how to set a limit order. You'll see a market little symbol that you would click on, and then they have market and then limit order tabs. Market's pretty easy. Source and destination, we click buttons, we make it happen. We're happy with our purchase. We see it in real time. When you click on limit order, you're going to find a from box at the very top, and you have to put in the asset that you want the limit order to be set. Let's focus on sell orders because we're in a bull market. And let's say you want to sell 250 XRP at a certain price. Well, they have a next box underneath that that says at the target price. You can drag up to sell, drag down to buy on your phone or on your desktop, doesn't matter. And then you could set the price of what you want to sell that XRP for. Let's say it's $5.25. And then the next box is where is that going to, from and to on a limit order. Let's say you want to build your XDC portfolio. And when XRP hits 525, it's going to liquidate the 250 XRP at $5.25, and that's going to convert it into XDC. Let's look at what the math to this would look like. 250 XRP times $5.25, that will get you $1,312.50. And then it divides it by the market price of XDC, whatever it is at the time. By the time I was doing this video, it was 0.058 cents. Could be higher, could be lower by the time that XRP price does hit. But remember, you're doing this and setting this up as part of your investment thesis and as part of your plan to either build your portfolio or just cash out and de-risk. Either one's fine. I'm not telling you what to do or saying what you should do. I'm just showing you how to do this and set this up on Uphold. And so now your new portfolio at those two prices, the $5.25 and then the 0.058 cents for XDC, now you've built a portfolio of 22,692 XDC tokens from the above limit order. Now there is a transaction cost with this. XDC has transaction cost, Uphold has transaction cost, so it won't be exact, but it will give you just the mechanics of how to do this if you've never done a limit order before. Now let's look at the pros and cons of each. For a market order, again, it's simple. It's really the foundation of trading. It's probably how all of us got involved into, hey, let's buy some Apple stock because it looks like a promising company. Let's buy some Amazon stock because this looks like a promising company, things of that. You hit buttons, or in the old days, go through a broker, either one. Hit buttons, look at your portfolio, you can monitor it. It's also faster because you're conducting that trading in real time. I don't know if you've ever had friends and relatives, maybe even, you lend them $100 on a Friday, and by Sunday they've spent $400. So as economic creatures as we all are, our liquidity on Friday night might look a little bit different than it does on Sunday night. So it's faster when you're in the presence of ready to make a trade and you have the cash on hand. Sometimes it's easy to do that right away because you don't know where the money's going to go on the weekend. And then by Sunday, you don't have any money to actually do the trade. So some people prefer the market orders for that reason accordingly. Some of the disadvantages, it is time consuming watching market trends. And unless you're doing this from 9:30 to 4 for the traditional finance world, to watch markets, to see what prices go up and prices go down, there's a very, very, very strong chance you will never buy at the lowest point of an asset, and you will never sell at the highest point of an asset unless you've got, the crystal ball to look at market trends, and you can develop that kind of skill. God bless you if you can. So with market orders, trying to find that perfect price to buy at the lowest point, and then trying to find that perfect price to sell at the highest point, sometimes a fool's errand, and it takes a lot of time to go through that. And if you're working full time with a family, and you've got other obligations, it just makes it very difficult to do, if not impossible. And it takes planning for this. You could be looking and hearing a piece of news and ready to capitalize on markets in a one-day cycle. Maybe you want to watch a trend for a 90-day cycle before you make a move. Again, watching this, setting it up, making sure it happens. You can even set alerts on your phone for a certain stock or an asset or a mutual fund or a crypto to get to a certain price, and you're going to hit that button when that happens. Well, what if you're in a 2-hour meeting at work and your phones have to be off and you can't be playing with your phone in front of your boss, and that perfect price comes to buy or that perfect price comes to sell, and you can't get to your little brokerage account to do it? Or if you're in the movie theater, with friends or with family, and you put it on the airplane mode, and it just so happens when you're watching Gladiator 2 for 2.5 hours, that's when the perfect price comes in, and you're not paying attention because you're not looking at your phone, you're watching the movie. Some cons of market orders usually come up, at least in that realm, if anything. Limit orders, pros are it's automated. Again, you will not hit the perfect price on the low point. You may not hit the perfect price on the high point to sell, but you might become within 10, 15, 20% of each, and maybe 5% if you're really good. And that's okay too. You can set within that 5, 10, 15% of whatever you think that price would be, automate it, and those limit orders will get executed if it hits the right price, while you're in the movie theater, while you're in the meeting with your boss for 2 hours, while you're staring at it and watching it happen. You don't have to, but sometimes it happens that way. It could be going on and executing at 3 in the morning while you sleep, because as we know, crypto is traded 24/7. So it takes some of that administrative burden out of you, having to press buttons and having to track everything. And for the swings that are in the market, some very volatile scenarios that we just went over the past month, as you've seen, 1, 2, 3, 4, 500% gains I've seen with Sologenic on my portfolio. Limit orders are really good for volatile markets, so you're not missing the boat and hitting that button trying to catch it at the right time. Set your price, be happy with it, make it part of your investment thesis and your planning. And cons of limit order, well, there's risk. There's risk that if you miss a train on something at a price that you deem as fair, changing markets and fluctuating markets, they may not execute that trade. I gave the example before of the $1.47 XRP. Well, if it hits $1.48, it's not executing the limit order and then bounces back up, and you may never see $1.47 again. You might have to change your investment thesis and what prices that you're willing to look at. So some final thoughts. I always say, all my videos say, have a plan during this bull run, kind of in the middle of it. They usually last between about 30 to 120 days. So do keep that in mind on the calendar. I have my calendar set for what I'm going to be monitoring, and I've got my limit orders set up and my plan in place. Execute the plan during the bull run. Don't let emotions get the best of you. It's going to be very difficult sometimes to see some of these numbers and how you're going to react to it. If you plan beforehand and set up the limit orders beforehand, and it just executes while this craziness is going up, down, up, down, up, down, you'll be in good spot because you actually made the plan, you're actually sticking to it. And again, limit orders are just one tool to help you automate your plan, so you can go on with your life and not make this your life for the next 3 months, or who knows, if we end up with another bear market in a few months. You know how long those take if you've been in through this one since the last one, and even before that, because XRP missed the last bull run because of the legal issues that we saw happen with the SEC. So keep that in mind. I've got some other ideas. I've got some other plans for some videos that I'm going to be putting out. Again, there's going to come a point in time where you're going to know everything that I know through these videos. So this channel will be coming to an end one day, but not anytime soon. I appreciate the patience as I work through this. Thank you for the emails from those who sent them to me, checking on me. I am doing good. I am on an island in the middle of the Pacific, and I couldn't be any happier. So giant hugs, everybody.